Part two of this session is dealing with part two of the estate planning bootcamp, professional collaboration. So my goal for you in this session is to do several things. Recognize, obviously, the importance of collaborating with fellow professionals. Understanding what different professional ethics and responsibilities we all have. Lawyers have different rules than CPAs that have different rules than the financial advisors and registered investment advisors and CFPs, all of whom have their own ethical rules. How to select an estate planning attorney. Well, that should be easy. We can cover that real quick. No, I'm just kidding. You all deal with a lot of different people, so make sure you're dealing with the right people. Developing a list of client scenarios. Many of you already have this, but if you don't, this will give you a list of things that you can use sort of as a checklist. And there is a checklist, by the way, in your folder that is a giveaway that we want you to have. And then reviewing financial and legal solutions together, doing it as a team. So our goal is to identify estate planning opportunities that you can identify, bring to your clients, involve your estate planning in order, and then also generate additional assets under management, additional insurance sales, provide additional accounting advice or additional accounting expertise, whatever that is. Everybody does stuff well in their own way. Not everybody can be everything to all people. This is where I have some differentiation with some of my attorney contacts. Some people think they can do everything for everybody. The general practitioners, you see them out there. They do wills and trusts, they do litigation. They do real estate closings, they do mergers and acquisitions. It's like the commercial, I can't remember whose commercial it was, but it's like selling jewelry and selling cars out of the same place. That's not your client's best interest. Some of us do things well, and we should stick to our knitting, and we should focus on what we do well. I've heard that from some of you in this room. We manage assets. That's what we do well. But we can't be tax return preparers and asset managers and insurance salesmen. And to everyone, maybe you can have access to the right people that do all of those things as experts. So everybody brings a certain level of expertise. Now, on the professional responsibilities and ethics, I have a star up next to the financial advisors. The DOL came out with a bunch of rules that have been percolating for years, dealing with fiduciary standards. You all know those rules better than I do, but we don't really know what the rules are yet because regulations are still coming out, and there are still questions on the regulations that are coming out and what they apply to and what you can do and what you can't do under these scenarios. So a fiduciary, as I define in the book, is somebody who is in a higher level of relationship to a client than anyone else. It's somebody who has duties of loyalty, care, duties of accountability, prudence. These are really high standards that the courts apply. When you're talking about a fiduciary, it's a really high standard. You're held to a higher standard than just a reasonable man. And it's always looking out for the client's best interest. That's our philosophy. And if all of you have that same philosophy, we're going to work well as a team. Insurance professionals aren't held to that level of standard if that's all they're doing. There are standards in the insurance industry, but there are state regulations that apply. And so we have to take, if you're an insurance licensed professional, you have to take an exam. And the exam requires that you understand what you can and cannot do as an insurance professional under state regulation, which are applied across all 50 states. The CPAs have the AICPA and state boards of accounting that regulate our behavior. I'm a CPA, I'm regulated by those rules as well. And of course, attorneys have state bars, and there are 51 state bars, including the District of Columbia, all of which have their own rules, which have interpretations under the rules and vary from state to state. If you're licensed in more than one state, as I am, in DC, Maryland, and Virginia, for example, I'm bound by all 3 ethical rules. So I have to know the ethical rules in all 3 states, and I can't do something in one state that might violate the ethics of another state. Our rules are pretty rigorous, and they're voluminous in terms of what we have to know about what we can do and what we can't do. So for financial professionals, the hard part about working in teams and collaborating is trusting the people you work with, knowing who to trust. And then the other hard part is, what I've found, is that a lot of people want to be the quarterback. Everybody wants to be the quarterback. I want to be the quarterback. No, I want to be the quarterback. It's like when we were little and playing on the football field or whatever. I want to be the quarterback. No, you're the lineman. You're big and slow, so you get up on the front. But the idea is that not everybody can be the quarterback of the client. And really, I think it's the client's choice, but it's also what you do as a professional and what resources you bring that dictates whether or not you can be the quarterback. And 9 times out of 10, I'm not the quarterback of the client. I am an adjunct. I'm on the team. I'm the offensive lineman. I'm the wide receiver. I'm the running back. I'm not the quarterback. The quarterback's leading planning strategy, but I do give ideas to the quarterback, and I do direct the quarterback to throw me the ball occasionally. So it's participation. It requires all the team members to cooperate with each other, obviously respect, and then managing time, and not billing clients. If you're billing on an hourly basis for every 10th of an hour, I've gotten into the habit over my career, 35, 36 years now, of I don't bill a client unless unless it's more than 3/10 of an hour, 4/10 of an hour. I just don't bother to do that. Why? Because it's kind of offensive to them that if they get a bill for 1/10 of an hour or 2/10 of an hour, I hear that from clients. And so I've stopped doing it. I don't do it. And if we do these fixed fee arrangements, I don't bill. So if the client calls me, there's no bill that goes out. There's one bill with a fixed fee on it. I think a lot of the accounting firms are doing that now. I think it's a good practice. That way they don't worry about the meter running all the time. How do you select an estate planning lawyer? Well, these are the questions that I would use. You can add your own spin to it, but how much of their practice is devoted to estate planning? Well, I have over 2,100 clients and counting, and they're adding up over time. It adds up over time. 90% of them are estate planning clients by volume, but by revenue, it's about 55%. Because a lot of the work we do is corporate counseling and tax. That's what I do. I have lawyers here who all they do is estate planning. They specialize. So John Didon, my partner, who's an estate planning lawyer, is a great estate planning lawyer, and he specializes in, his real specialty is in supporting organizations. He knows more about it than anyone in the country, and cryogenics. So if you want to freeze somebody, he's the guy to go to. Catherine Schott-Murray is an elder law specialist. She knows more about it than any of us in the practice. We have 7 lawyers in this firm alone that do estate planning, trust estate planning. What other areas of law do they practice, or do they have other areas of law that they can help you with? So some of the folks in this room, their companies are clients of ours. So we actually do corporate work for them. We do labor and employment work. We do real estate work. We do banking work. We have bankruptcy lawyers. We have domestic lawyers, divorce lawyers. 60 lawyers here and increasing, and litigators, a lot of litigation. If they're doing individually all these areas, that's a red flag, as I pointed out before. I don't think it's a good idea to have one lawyer doing everything for you. Having a lawyer within the law firm be your quarterback is a good idea. So I serve as the quarterback for a lot of our bigger clients. We have a retail client, $500 million in revenue and growing. I am the quarterback here at the firm. We handle all kinds of issues, everything from the family planning stuff to its closely held company, to the corporate, to labor and employment, to litigation, to trademarks. We have How do you stay current as an estate planner? Well, this is one way I do it. I teach constantly. I'm teaching. If you have an estate planning lawyer who is out there on the speaking circuit or doing blogs or teaching, that's a good signal. Going to seminars is good too, but that's more passive and you're sort of sitting there and listening. Whereas if you're teaching, you have to prepare. You have to know what you're talking about. What does the attorney belong to in terms of estate planning organizations? Are they involved in organizations, or are they doing ongoing stuff with other estate planners? That's good because you're collaborating with other people who are thought leaders, and thought leadership is really important. Again, are you published? Are you writing? Do you speak? What expertise do they really have? If you're dealing with an estate planning lawyer who's recognized as somebody who really knows what they're doing, then that's good. If you're not, you have to be cautious about what it is that you're sending your clients to, who it is that you're sending your clients to. So think about it. It's not just cost. Cost is important, but it's expertise. Even for clients under $10 million, $5.45 million, it's important. If the attorneys provide a continuum of care, if they do updates for their clients, for me, I have clients subscribe to the blog, to my blog, Blueprint for Wealth. I try to get everyone, when they come in to see me, to subscribe, and we've got over close to 2,000 subscribers on the blog right now, and that's good. That's one way. Another way is providing an annual continuum of care. So you can come in and see me each year for a fixed fee. We'll do certain things for you. We'll update your trustees, your guardians, or something like that. Or it may be an overall fee that covers some period of time. The idea is that what continuum of care does your estate planning lawyer provide for your